Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Thursday, the 18th of May, 2017, just after 2 o'clock p.m. Central Daylight Time. It's a wild trading day. We had a flash crash that took place in the British pound. We had a metal market that did a dramatic turnaround of $20 from the high to the low. The silver market fell out of bed today. A large part of this and a rally in the stock market took place as people went back and on the different websites we saw a May 3rd video of Mr. Comey being investigated in front of one of the committees in Congress. And he was asked, anyone tried to influence him, blah, blah. Now, I don't know if the president was specifically mentioned. I think it was just an influence question, but it could be coming from the Department of Justice, hard to tell. The market grabbed on that and said, if you need the proof, here's Comey's own words, and boom. So that's part of what kicked up the market. You also, if you keep up with the markets, know that in Brazil, overnight, a big issue now. Their president, who just got into office, they had one scandal, he just came in, the other president hasn't been tried yet, and now it looks as though they have him on a recording trying to do bribery. I'll leave it at that, but suffice to say, their stock market down in one day, I watched certain of the indices down 19-20%, the currency down 7.5%, soybeans there at one point ceased trading. Everything priced in real was getting hit all over the place. Interesting day. But you didn't hold in the gold. You didn't hold in any of our metals. That's the important thing. I had a bet with one of my friends. He was betting at what time the market would be positive. He thought it would be down. I thought it would be up at 8:45. In all honesty, our bets split because one of the indices was up, one of them was down that we were betting on. But I also said I think the market will be higher today. And so far, so good. But boy, we have some time left. So let's look at the gold and get a feel for what's going on. Certainly, if you take out 12, 14, 30. I said this yesterday. I'm going to say it again. That will be ugly as can be. Why? Right now, you've got a pattern of higher lows, higher highs, bullish. You're over the 18-week moving average of closes, bullish. But if you take out 12, 14, 30, you will end up and flip this pattern because this will continue down to the potential of lower highs, lower lows into maybe the 100-day average, let alone the lower Bollinger Band. So I'm going to say that this market is at not only a key juncture, it has to hold here if you want to stay bullish in the near term. Are we getting a correction today? For certain. Take a look. The daily area chart of closes, you can see how the market backed off here into the 1247.20 level at this hour. It closed, I think, a little bit better than that. You can see how this big up move is pulling back. You can also see when you look at the chart that you do have a pattern of higher lows and higher highs. On the daily chart, the only thing that breaks this pattern under the current formation, and formations change day to day, is taking out 1216.90. Nothing else will do that. That's quite a break from here. You got to break $30. That's not going to be easy. Guess what number stopped the rally? Remember what I told you, the first challenge again of that 200-day average? For those of you that get my newsletter and those of you that get the morning subscriber video, I said that's going to be your battleground. I said it last night, saying it here. The support is most likely going to be seen at the 18-day average of closes, and between there and the 100-day you have another layer. But the trend of the market is up at this point in time, not down. I want to make that ultra clear. Did you get anywhere near the upper Bollinger Band? No. Did you get anywhere recently near the lower? No. So I'm saying that you could almost see how these moving averages are. The price wants to squeeze in there, but with the trend up, you're looking for ultimate resolution to the upside on this formation. Formations change, but on this one right here, I think the support's 1242.70. When you look at market momentum, it had been up. It stalled a little today, but it did not turn down. You didn't arc that red line back to the downside, so the market still has that upward momentum. The silver lost what to the gold today. You can see how the gold gained. Every time you go up here, you need more ounces of silver. Think of it this way. You got a bushel basket. You want to get an ounce of gold. 68 now. Right now it's up to 75.15 ounces of silver you need for an ounce of gold. When you look at silver, you see the pullback. Silver has not had the same formation as gold. It's got a lower low, and this high is higher than the last high there. That's why I love swing lines. They help you to see all this. Number two, the market is back under the 18-day average. So you've got downside bias today because you're under the 18-day average. Momentum had been going up, and it paused here, just like in the gold, and it's not been in an uptrend. That's all you can say. The other thing I'm telling you is happening, and you watch it now as we get into the next few days. The Bollinger Bands are wrapping their arms around price here, and that's the black band right there and the other, and they're going to keep coming in at you very, very quickly right here until they're much closer to price. In the copper market, and looking back at it, well, you failed again at the 18-day average, but it certainly seems like the market wants to come up and challenge that number again. I see no trend. I see no bias other than some downside bias because you closed down, but momentum just stuck here at oversold territories. In the platinum market, like in the gold, I see an uptrend. I see a market with higher lows, higher highs. I see momentum, unlike gold, starting to arc down a bit. That's a little scary. I see support 927.40, but I don't like the risk reward. If you buy this market here, you got to risk all the way down under the 900 level. It's a pretty big dollar risk. It's over $1,000 a contract if you trade futures. The palladium has just been losing to these other metals, and we've talked about that. You got a higher high, a lower low. Now you're under the 100-day average. You're under the lower Bollinger Band. It's certainly not a sell zone, a way that I teach trading, which is I always teach you do not buy over a Bollinger Band or under it. That's how I learned Bollinger Bands, and I won't change my theory on it. You want to sell either over or buy under. You don't play it this way and start selling under a Bollinger Band. And you're oversold as can be, and it's the first test of the 100-day moving average of closes in quite a while. It's an extreme, but that extreme could be for a lot of reasons because the industrial metals, the silver market, it is an industrial, the platinum market, the palladium market, the copper market, certainly none of them are in bull trends at this point. Then we get to the dollar index, which got under the Bollinger Band yesterday, and I wish I could tell you I'm surprised. I'm totally unsurprised. Whenever you get under or over a Bollinger Band, it's rare that you stay there very long. And all that you're doing is bouncing to the right-hand side of it. It's certainly not changing the picture on the dollar, which is not much of a trend picture either. You got a higher high and a lower low, but you're down to levels you haven't been since November. And this is what I'll call a bounce, but it could be called the dead cat bounce. You're not going anywhere. You didn't take the market out of the embedded reading either, and even if it should have some zip to it, got a lot of resistance, about 100 points higher. So I look at all that. I look at the energies not doing very much of anything. I look at the markets as a whole. You didn't get much of a sell-off in the bonds and the notes. You did not take out of those markets risk premium from yesterday. If the yen, after gaining 150 points or so yesterday, is only giving back 30 points, this market is still keeping a lot of the risk premium in it. But the gold market, and that's what we're talking about, did suffer on that today. But if you looked at the daily charts and the weekly, you haven't changed the fact that you've begun an uptrend. The question is, can it carry? And that's what I think we're all looking at. We talk about that in our research, and the neat thing is I'm waiting for the new issue now of Modern Trader. We're mid-month now in May, so I'll be getting it any day. It comes to you free as an email from them. How do you get this? Because if you go to their website, you're going to pay $79 for a one-year subscription, and it will include market focus and everything else. But this magazine is special. It's not okay. It's a real special magazine. I say that because I've been reading it, I think, 3 decades. Does that give you an idea? Today it's called Modern Trader. It was Futures Magazine prior. You get it by calling us at 866-973-2077. You can go to our website. You'll see a carousel of free offers on our homepage. You can also click right here if you're watching me on YouTube, this icon. The forms will come up. Choose the free offers you want from us. Or under us on many websites, it says click here for Ira's free offer. Take advantage of it. As soon as we get the new issue sent to us, what we'll do is we'll make a copy for you so you can see what the new stories are as well. I'm Ira. You have a good day. I'll talk to you tomorrow.